The fuzzy logic of the sharing economy has been dealt a new blow by European judges, who ruled on Wednesday that ride-hailing app Uber is not a piece of software matching supply and demand. It's a straightforward transport firm, and should be regulated as such. That distinction's important, not just for Uber, but for other Silicon Valley darlings such as apartment rental site Airbnb. Operating across Europe's single market is much cheaper if you're a software service than if you have to obtain extra sector-specific licenses, comply with national regulations and pay required taxes. The EU Court of Justice ruling isn't new legislation. But if Uber is a taxi firm, then Airbnb starts to look a lot like a Hilton, as regulatory expert Vincenzo Genna notes. Stricter rules have already started to slow Airbnb's growth. Valuation source, CBIN cites the story behind this specific Uber case begins in Spain, where its attempt at rolling out a POP service for unlicensed drivers faced immediate and strong resistance. This was seen too in several other countries, such as France, which put company executives on trial. Uber has since tried to paint Spain as an exceptionally restrictive place to do any kind of transport business. But no dice. Wednesday's ruling says countries are perfectly within their rights to ask Uber to respect their own transport laws, restrictive or not. The ruling won't surprise Uber, given previous legal opinions. Nevertheless, it means extra costs and complexity in an EU market of 500 million consumers. And this comes as the firm fights on several fronts to defend a $70 billion valuation. Sure, the writing was already on the wall for UberPop, and the ruling won't on its own affect licensed Uber drivers. But it will be trickier now to expand in other markets and add services beyond the core licensed UberX. Squeezing more revenue from Europe won't be easy. There's a broader warning here for startups hoping to connect punters with merchants at minimum cost. You know, those guys who say they're a tech company, rather than a pizza deliverer or whatever, and therefore have little obligation to the people who do the work. Regulators will be in closely to see just how non-professional these services are, and how profitable. This relates to central parts of the EU Court's decision, which ruled it was fair to view unlicensed Uber drivers as breaching transport laws. It also scrutinized just how Uber prices and governs the service in question. Other startups such as carpool app BlaBlaCar have faced less regulatory ire, as they claim their drivers are purely covering their costs, not making a living. If Uber's a taxi firm, and its drivers are employees, then that calls into question the whole thesis driving the gig economy and the venture capital-funded apps racing to exploit it. While tech libertarians will try once again to single out Europe as hostile to business, there's a chance that the bar being set by the judges will be followed elsewhere in the world. In a global sharing economy, why not share the rules too? This column does not necessarily reflect the opinion of Bloomberg LP and its owners.